Welcome traders to the weekly recap from Apple Markets. My name is Chris and we'll dive into the euro dollar, dollar yen, and of course Aussie and pound as well. First of all, be aware that this video is shown to a global audience, may not be suitable for everyone. Please visit applemarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. I want to start with the euro-dollar daily chart at this moment, and we see a strong daily candle on Friday, indicating the bounce that I was already expecting. Yes, the euro-dollar of course broke through the support and was showing good bearishness, but I was still very much in focus that the bigger triangle on the weekly chart could still be in play. And this seems to be confirming it. The bullish bounce indeed happening, and it's not as bearish, kind of the impulse is not as strong as I would expect if a downtrend is indeed starting. And you can see the awesome oscillator here too. You know, it's a decent push, you know, but all in all, I think that this is basically finishing still more of a triangle formation like this, and I'm expecting a three-wave bounce here for a wave E of that triangle, and then the new downtrend to start. All right, so that also has part, of course, to do with politics. The U.S. elections is in November. October will be finishing today on Monday. Then we have a new month. In that new month, of course, there's a big political event for the U.S. and therefore also the U.S. dollar. So that could stall price, make it go sideways. There could be volatility, of course, connected to the event. And we have an extra blog on that, you know, extensive blog coming up on Monday. Take a look at applemarkets.com website and go to blog, and of course webinars as well on Monday next week, plus on Thursday. Let me show you that. As you can see here, November 7 and 10, we're going to be talking about the U.S. elections and our forecast from Nennet and myself. So I hope that you will join in these two webinars. We got a lot of things to discuss, a lot of potential angles that we want to take you through and discuss. So I think it's going to be worth your time. On Thursday this week, we have understanding the difference between trading and analysis, and you know, why are you better at one than the other, and what can you do to bridge that gap, etc. And on Tuesday, Wednesday, we take a look at live trading using pivot points in Keltner, and Nennet, of course, has his usual recaps on Mondays this week and next week too, but next week will be combined with the U.S. elections. So to continue with the euro-dollar, basically expecting a three-wave move up. I think the 38, the 50 fib could be, you know, turning spots for the downtrend continuation of the weekly chart. Here you got that beautiful downtrend. Here you got a basically triangle. I'm expecting price to go up to that 50 fib and then turn. So that 50 fib here at 112.30, well, it could be the 61.8 fib, any of these fibs to be honest. But I think the most likely fibs are probably these three. So anywhere between 111 and 113, let's say. So from this point of view, I think that if we zoom into lower time frames, we're seeing a zigzag or some type of correction. And whether this correction is over, I'm not sure. I think it could still push a bit. On the hourly chart, you see it's kind of making a correction like this. It could still go back to support, especially if we put a fib from here to here, for instance. Or maybe actually, I think I have it here on the fibs. On the wave analysis today, I have a fib from here to here, I believe. You can see it stopping at the 38.2 fib. If it stops at the 50 or 61.8, I think it could still make one more push to 110 or even 110.50 before this correction is over. If it breaks below 109.40, then I don't think that's going to happen. So that's key. 109.40 could be a bouncing spot between here and 109.40 up to 110 or 110.50. 110.50 or 110, I think, could be resistance spots. What could happen is price hits the resistance and then makes a three-wave down, and then I would expect a three-wave up to finish basically that wave E. All right, so yeah, basically expecting quite a lot of choppiness, quite a lot of these ups and downs. That's just, you know, part of the deal, part of the market environment, part of the market structure when you have these triangles, and you know, we shouldn't be surprised for this type of environment. So ultimately, though, I might be totally wrong. This could just be an ABC zigzag, and that's it. No more correction to the upside. Well, in that case, I would have to really see price breaking below this bottom, or I would need to see strong momentum like this and a bear flag. I would probably need to see price at least fall towards 109, below 109, and then a bear flag like this then there's a pretty good chance of a break too. Otherwise, I am marginally bullish, as you can see, but just because it's part of a correction like this, then we could see a correction, and then again a correction, and then finally the downtrend continue. All right, now the pound USD, I'm not too interested myself. Basically, just quite choppy and stuck between these two trend lines. So ultimately, if this week were to break above 122.50, there could be a bigger correction to the upside, and pound might make that triangle, expand that triangle, basically expand the correction to 123, 124. Now, if it breaks support, then a downtrend might start. I kind of skeptical about that because of the political event in the US, the elections, of course, but I think that after the elections that could happen. Till now, or to that moment, I am a bit cautious with this pound. I don't see much interesting developments here. But what I do think is interesting is the dollar yen. I see that price is stopping at the 23.6 fib. We had, basically, if you look at the daily chart, a breakout, of course, of the daily downtrend, the breakout above this top. So we got a higher high. So we have not only a higher low, but also a higher high at the moment. Of course, classical signs of an uptrend. Now price is making a bit of a dip on the hourly chart that looked quite dramatic this fall. It was one big hour down, hitting the 23.6 fib. What could happen is that we get in a zigzag like this down to the 38.2 fib. So from my perspective, I think if price gets here, I think that's an interesting long zone. I'll be looking for bounces here. I'll be looking for trades to go long. I don't think price should break below the 50 fib. So I might use a tighter stop loss. If there's a candlestick pattern to 38.2 fib, I just might go with the stop loss below it. But the other alternative would be just to go below the 50 fib and this bottom. And targeting, well, basically the 272 target, 106.80, or even the minus 61.8 target, 108.50. Those are big targets, I know. But, dollar yen is pushing and pushing. It could continue with that and indeed just hit those Fibonacci targets. In the bigger picture, that is not that aggressive because if you look at the weekly chart here, you see the uptrend, the correction. This is a 50 fib basically. That's not so aggressive because if you look at the space that basically price has before it runs into these bottoms or these tops here, well, that's quite substantial. So 108.50 really, or 106.80 is quite small retracement if you compare this, the price movement compared to that swing high. So if I put a fib from here to here, you will see 109 is a 38.2 fib. Even that is quite shallow. The 50 fib is also, pretty doable, I would think, if you retrace this entire swing high, swing low. So yeah, there's a decent amount of space. Of course, that space will not necessarily be used in one shot, but for now, I think if price gets to the 38.2 fib or the 50, there could be a bounce up to those modest targets. If price does not make the retracement lower, I'll be looking for a triangle here. I want to see a lower high, I want to see a higher low here, and then the breakout above the triangle could be equally interesting for upside. Last but not least, the Aussie daily chart. We had a bit of a pin bar here. We had yet again a failure here actually. I was talking about Wednesday in the live webinar that if there's a strong close, it could be a breakout, but if there's a wick, then it's obviously probably not breaking out, then it could be a failure yet again to break through this resistance. It's failed so many times, yet again it fails. Will it now succeed? Who knows? But for the moment, we're bouncing basically at support. I see price making these dips and finding new buyers, finding new support levels at the moving average at these bottoms and support trend lines. So for the moment, you can see bouncing off the 78.6 fib, bounce off the 61.8, making kind of a zigzag back to a lower fib, and we're seeing a start of a rally. So it looks like it's a bit of exhaustion here with the doji on the hourly chart. So moving back about halfway, maybe building a inverted head and shoulders, going back to the pivot point as well, and the 50 fib for one more approach, or one more bounce, I should say, to retest these tops. I think seems like a decent probability here. Of course, the invalidation level is the 75.50 and this bottom. So yeah, that's my idea for the moment on the Aussie. Is a bullish kind of trade idea here, obviously on the Aussie. for this week. Let's see how that goes. And it would be basically, maybe the R1 could be the target at 77. Let me double check that. 76.75. All right, 76.80. All right, so that wraps up the summary of today. Hope to see you in the upcoming webinars, and above all, wish you great trading. Cheers.